Good morning, this is Tim McGowan for the Finance News Network. Stocks climbed for a third consecutive session on Friday as investors digested strong tech earnings and looked past concerns about high inflation and a recessionary environment. The Dow Jones Industrial Average gained nearly 1%, the S&P jumped 1.4%, while the Nasdaq added 1.9%. The Dow rose to a 6.7% gain for July, and now to officially exit its bear market, the average needs to close at about 32,877 mark, which is around 30 points higher. The S&P 500 added 9% for the month. The Nasdaq Composite, while still in bear market territory, is up roughly 12.4%. Those were the biggest monthly gains for all three indexes since 2020. For the tech-heavy Nasdaq Composite, the month was the best performance on record, as tracked by the Dow Jones Market Data Group, rising 12.4% for the largest percentage gain since April 2020, fueled by better than expected results from Microsoft, Amazon and Apple, as well as falling Treasury yields, with the 10-year settling back at 2.64% on Friday. Across the sectors, the earnings calendar was the big tailwind on Friday, with big tech and energy in focus. Energy rallied on crude and big oil earnings, with Chevron up 9% and ExxonMobil up 4.5%, posting better than anticipated results for the previous quarter. Amazon shares popped nearly 10.5% after the e-commerce giant reported stronger than expected sales for the previous quarter. The positive comments from CEO Andrew Jassy and other top executives caused investors to shrug off the fact that the giant internet retailer reported its slowest quarterly sales growth in 2 decades and has cut nearly 100,000 workers. Apple's quarterly results were also better than expected, as big tech's profits have been more resilient as the economy has slowed. However, the latest batch of corporate results has been mixed, particularly in the retail sector. It's becoming clear that retailers badly misjudged supply and demand. Part of their miscalculation was caused by supply chain delays, of course, which prompted companies to secure products far in advance. Strong consumer spending may have saved the economy from ruin during the pandemic, but it has also led to enormous excess and waste, with retailers now forced to slash prices on inventory in their stores and online. More than half of the S&P 500 companies have reported earnings, with 72% of those names beating expectations. Another flurry of reports are coming this week, with 152 of the S&P 500 constituents scheduled to report. Bank of America equity flow data noted that US equities attracted $9.5 billion in the week ended to July 27, which is the most in 6 weeks. In currency news, the US dollar index was down 0.4%, with the yen weakness the big FX story for the week. One Australian dollar is flat, buying 69.9 US cents. On the commodity front, iron ore futures are pointing to a 3.8% gain today. Gold gained 0.7% of an ounce, rising to a fresh multi-week peak on Friday, with its safe haven allure getting a resurgence as the US dollar gave up initial gains. Silver was up 1.7%, copper was up 2.9%. Interestingly, in Chile, copper producers are pushing back on the government's royalty proposal, with government reforms expected to add considerable uncertainty to future investment decisions as demand rises into the clean energy transition. Oil gained 2.3% on the weekend as oil prices rose in European trading, as attention turned to next week's OPEC meeting and expectations that it will dash the US hopes for a supply boost. The SPI futures are pointing to a 0.7% gain today. This is Tim McGowan for the Finance News Network. Have a good day.